What is going on, guys? This is Mando with M Traders, and today we're going to be talking about natural gas, and we're going to be talking about the market. For those who do not know who I am, I basically talk about natural gas trades or the overall direction of natural gas based on fundamentals and also technical analysis, as well as the S&P 500 or the Dow Jones or the Nasdaq, what I think the market's going to do. So if you would like to know more, make sure you go to the description. I have a Discord chat link down below where you're going to be able to meet other traders that are just like you. Or if you're not into that chat scenario, that chat mentality where you can talk with other people basically 24/7, like magic, you can just follow me on Twitter, which is _M_traders, or on StockTwitch, which is M_traders. I know somebody took over the M_traders on Twitter, so I came up with that. So that being said, let's get started. So in my last video, I did talk about some of the stuff that was going to happen. The fact that I knew what's the most probable scenario where the market might reject and under what conditions. So I'm going to be bringing up the chart shortly so I can show you guys what my last video was about and what I thought it was going to happen and what actually played out. So first thing first, so I was talking about this likely scenario that the market was going to reject. But why, you may ask? Thanks for asking. One of the conditions was this line right over here. This is the EMA line 55 on the daily chart. If you guys are looking at it, it's been not acting at all as resistance. The one that's been acting as resistance was EMA 9 on the daily chart. You guys see falling perfectly. And then finally we broke above, held above, right above this line over here, which is the Fibonacci retracement 23.6% line. And we were hovering above this line. You know, we touched right over here one time. We actually came down right above that EMA line. Then we actually gapped down just a little bit more, right about the 23.6 retracement line. Again, we tried touching the 38% retracement, rejected again for a second time, went back down, 1, 2, 3 rejections, and finally it skyrocketed, right? And we went to Fibonacci retracement at 50%. So in my opinion, the 50% retracement line is actually quite important. You know, if something goes up 50% in a matter of a month or so, especially on the daily chart, you're going to have some type of rejection. So two things that I was looking at the 50% retracement, but also I was looking at the EMA 55. EMA 55 hasn't been touched for several days, right? For several days, it has not been touched. But finally, we did. We touched once, got rejected. You know, we gap up a little bit, got rejected, came back up, right? We went right above EMA 55, right over here. And then, of course, we rejected again. Now, that being said, we are right now at right above EMA 100 on the hourly chart, which is also coincides with this resistance, well, previous resistance. Right, we see it bouncing from here, rejecting from here. We see it touching here, rejecting, kind of went up, then came back down. We broke EMA 55 on the hourly, right? But we were not able to hold that price. So we continue going upwards. And finally, we hit it again. We went above. And that's where the EMA, when we went above EMA 55 on the daily, and finally decided to give up some of the profits, came back down to EMA 100, which, guess what, matches my previous resistance. We see it bouncing from here as well. We touched it this morning when we opened, couldn't hold, went above, right above EMA 55 on the hourly chart, got rejected. Now we were riding this EMA 9. However, this level right over here, it looks like a double bottom. So if we are going to reject from here, this will be the best likely scenario. However, I am short. I started shorting it yesterday, which yesterday was Tuesday. Tuesday at the highs, that's when I started shorting it. And I did not sold my positions. I did not sold any of my puts because of what's happening out there. So what's happening out there? Okay, so we were talking about coronavirus last week. We were talking about coronavirus this week. We saw how the curve was flattening. However, the infections were still increasing at a slower rate, but they were still increasing. So that's something also you got to take into consideration. Also, we're going to have unemployment numbers tomorrow, Thursday at 7:30 a.m. Central Time, which that will give us another idea of what is going to happen. If you guys noticed last two unemployment reports, when basically we had record highs on number of unemployed claims, the market rallied in quite a bit. It's like, oh yeah, we did very bad, so we're just gonna go all the way up. I mean, that doesn't make sense, but that's the market. The market usually sometimes doesn't make sense. When it needs to go down, it actually goes up, and when it needs to go up, it actually goes down. So I expect the unemployment numbers being very high tomorrow. Hopefully that sinks into the minds of people where like, yes, maybe the curve is flattening. However, the infections are still there, right? So that's something to take into consideration. Unemployment is going to be very high. I still think the economy has not digested all those ideas just yet. So in short, I'm still looking for another rejection, at least from EMA 55 before we can actually go down. Notice that this support has been very strong, and it's also correlating with the EMA 100 on the hourly chart right over here. I know it's a lot of drawing, that's why I keep deleting it, but this line right over here, you see, we held above, we tried to rally, we came back down, we went below the EMA 100. Couldn't go below the support area, so I see this a double bottom, I see this a double bottom. Still, I am still short, I'm not long. I gotta reassess the situation tomorrow and see what's going to happen. So make sure, if you guys haven't subscribed to my stock tips or my Twitter or my Discord, make sure you guys go do so. And also my YouTube. YouTube is the most important method of communication for me at this moment. So make sure you guys are subscribing, because it's gonna help me a lot. But again, the plan for the market is that it's going to reject somewhere around this EMA line. So probably the EMA line might go like this, and then finally when it rejects, it's finally going to break, right? And I'm looking at this level, 2710, 2711. Well, why 2710 or 2711? Good question. Because in the 4 hour, it's one of my levels of support / resistance, previous resistance, now it's a support. We got to reject it here, we reject it here, we reject it here. So I'm thinking if it does go down, it's going to go down here first, which it actually correlates with around EMA 55. If you are still bullish, that might be a very good entry if you're bullish. If you're bearish, that might be a continuation of bearish pressure, but it might correlate with this line. So I think this section right here might be the most powerful bounce that we could have intraday. So if you are long, might not be a good idea. I mean, might be a good idea to jump in on longs right over here. But for me, I'm short. I'm expecting still either retesting the lows of the year, or at least going with a lower low for the year, just because this thing is not over yet. Those are just my opinions. Anything can happen, but since we're here, we wanted to talk about it. Let's jump over to natural gas. So what you guys are looking at is the 1 hour chart on natural gas. Currently, it is at my buy zone. I did add it at around 1.6. So I bought some of UGAZ at 1.6. I sold it at 1.64. I waited for a pullback. The pullback happened, and I jumped in again about 30% capital at around 1.58, 1.59, around that area. That's where I bought UGAZ. However, it's 30% because it might be a possibility that it still goes down. So why does natural gas prices might go down? Well, natural gas prices might go down for a few reasons. One of them is that even though we are seeing colder than normal weather for this season, natural gas traders are still very well aware that the shut-ins, the industrial shut-ins are still in effect, and they might even prolong even later, which is going to affect on the demand of natural gas. Because if the factories are not running, if those office places, those movie theaters, those restaurants are not up and running, that means there's no demand. Even though there's going to be demand at home because everybody right now is at home, but it's not creating that extra demand that we need. Now, there is another side to the coin, which is that we are supply is actually going lower. So production is actually going lower. So what does that mean? Well, right now, traders, I think they're just focusing specifically on the demand and not about the production. So once the market actually reopens, the restaurants, the theaters, the factories, that's going to create extra demand, and adding to the supply, we're gonna might have a deficit by the end of the year. It's gonna make natural gas prices go up pretty high. I think the natural gas prices might wanna go retest 1.9 at least on the interim, and by winter we should see natural gas prices go, I think, either $3 to above $3. But again, that's probably 6-7 months ahead. So I'm not going to be talking about 6-7 months ahead. I want to talk what's in the immediate, in the prompt month. That's what I'm going to be talking about. So there's a few things that I'm waiting for. I'm waiting for more cuts on oil. Why? Because if you cut oil, also natural gas is a byproduct of oil. That's going to affect also the supply or the production. The other one will be either warmer than normal weather or colder than normal weather. But again, that weather factor is not really affecting, because natural gas traders are looking at the demand, and the demand is not there because everything is shut off. So once we start up and running, we're going to see this thing up and running like crazy. I think 1.9, even $2 if possible. So I started adding little by little, just because I'm waiting for that to happen. So if you guys were following me on Twitter, you guys will notice that I actually said I was gonna buy natural gas, UNG call, UGAZ, when natural gas was at 1.57, and once it reached 1.9, I said, I'm gonna sell it all. You know, it was an amazing ride. It was over, I wanna say, was it like 30%? So this is when I said, I'm gonna marry UNG, I'm gonna buy UGAZ, and it actually rallied. Okay, I was a little bit short, not 30%, but about 23%. What does that mean, you guys? You guys, that means probably around 60 to 70%, you know, profit, which is amazing. You know, who don't want to have a 60% profit? But once it reached 1.9, I said, it's time to go short. However, I did one short, but I sold a little bit too early. I sold right at the 50% retracement, which is right over here, right here. That's when I sold. I should have, you know, added back in right over here, but I didn't, right? But it's okay. We're going to wait, and we're going to have a better entry. And that's what I decided to do. I just waited. And I added probably a small position, a very, very tiny position. I added down here, right over here, a very tiny position on UNG calls. You know, I extended, I rolled them over, so I'm not worried about those. But I actually waited more and more and more. And once it reached right over here, that's when I bought UGAZ. I bought about 25% capital. It went to 1.64. Once it reached 1.64, I sold. And once it came back down right over here, and a lot of squiggly lines, right? Once it came back down here, that's when I added back. I added about 30%. Not to worry again. For me, I mean, if you are concerned about the type of trades you do or the swing trades, I mean, intraday plays will be the best option for you. But also make sure you have stop losses. Stop losses can save your account. I cannot stress that enough. Seriously, it can save your account, especially if you don't know just yet how everything works. If it doesn't go your way, why hold it? Some people, I know people that have been holding certain stocks for a very, 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 very long time, and finally they probably were down 80%, right? And once they recover all the money and they go all the way up to, like, you know, recover 60% of the money, they are still holding, and they expect it to go higher, so they don't want to take a loss. And what happens? It comes back down, and instead of, you know, recovering those 60% goes lower, and they lose even more money. Now they're like down like 90% of their account. It's very important to have stop losses, in my opinion, but you can do whatever you want. It's your money. You use it how you want it. So when it comes to demand, it comes to supply, and it comes to weather reports, where do I get my information? How do I know that it's going to get colder? Well, should I just look at the news? Should I look at the weather channel? Should I look at, you know, what my iPhone says or my Samsung says? I mean, all that weather that you're seeing a week or 2 weeks from now, it's most likely already priced in. That's what traders are looking at. Traders are actually looking ahead of you. They're looking 30 days, even longer, even 45 days ahead of you with state-of-the-art weather system, but it's very, very expensive. So instead of spending like $1,000, $3,000, you know, a month just for that service, you know, I have another service that I use that is actually amazing, and I'm going to show you what it is and kind of go over a little bit of what it entails, so you kind of have a better knowledge of what to do in case you like to trade UGAZ and you like to trade DGAZ. That might come in handy. So this is what I use. This is called hfirweather.com, which I have a link to me. You know, it's going to help me a lot if you click on that link. Believe me, it's down in the description down below, which is only $150 a year. Or if you want to pay monthly, you can pay monthly. It doesn't really matter. But for $150, you know, that's less, I don't know, less than $15 a month, whatever that is. It's extremely cheap. I used to pay $1,000 to $3,000 a month just to have somewhat of, you know, it was more extensive system, but I didn't even look at the system. I was just looking at the total day degrees, the cooling day degrees, the heating day degrees. That's what it interests me. You know, what's the weather going to look like, you know, 15 days from now? Date number 16. What's the extended model going to be? You know, things of that nature. Right now, I like to look at what the changes are for the next, you know, 15 days. That's what I want to see. I want to see what's tomorrow is going to be. The next report is going to come out for, let's say, if the last day is right here, is 4/30/20, then tomorrow is going to be 4/31. So I want to see what 4/31 is going to look like. I want to be one of the first persons to look at. This is called the GFS ensemble. This is the GFS model. So what's an ensemble versus just raw data? You know, make sure you Google it. However, you want to look at the GFS ensemble or the ECMWF ensemble. Right now, I don't have access to the ECMWF. It is coming, so I'm waiting patiently. But the GFS is what you want to look at. So it's going to give you kind of an idea of what the total day degrees are for the week or for the month, especially when we don't have shut-ins and the entire United States is on hold mode where everybody's at home. But when it's running, you know, everything's normal, the supply and demand is normal, but now you want to see weather. What's going to increase that demand? And actually, it's weather. What am I looking at? I'm looking at this. This is what I'm looking at. I'm looking at the weather. If you guys want a video exactly of how to read it, you know, I can make a video, but I gotta have enough people signed up, you know, to kind of make it worth it for me to explain it to a lot of you. But for right now, it's just a quick introduction. So this is what I'm looking at, total day degrees, you know, 15. What am I looking at? I'm looking to see if total day degrees are increasing or decreasing. This might be, a lot of people are like, oh, it's decreasing. Yeah, but is it getting hotter or is it getting colder? So lower day degrees is not good because obviously demand is going to go down. So especially right now with the shut-ins, if you got low demand and everybody's shut off, like all the businesses, it's not going to help out a lot. So I want to see what's going on the market. What is the weather going to look like? Are we going to have more consumption or more demand based on the weather? This is where I look at. Another thing to point out, these are the times where it runs. If it runs 4 times a day, right? It runs midnight, 6 a.m. in the morning, noon, and 6 p.m. So it runs 4 times a day. So that's actually pretty good because you can really see what's going on. But I only focus on the ones at noon and at midnight. And I think that's the one that most traders or most knowledgeable traders that trade the natural gas, those are the same dates that they look at. So next is the chart. So this is the chart, kind of easy to read. What is the TDDs doing? Are they going down? Are they going up? And this is the 30-year average. Right now, we're below the 30-year average, which is not good. However, we are at almost, you know, a 25-year low. By the way, if you look at natural gas prices, the charts don't really pay attention to previous days because last month, 1.57 might be the same today as 1.45, right? So, you know, you got the rollovers and the price differentials, right? It can be 1.5 yesterday, and when it rolls over, the contract rollover tomorrow, it might be 1.6. That doesn't mean that it did a 10-cent jump. It's just that for that month, the futures were already 10 cents above. So if that goes below 1.5, it's like, you know, yesterday's price actually went down to like $1.3 per MMBTU. Don't really pay attention to the charts and the price levels because right now we are like a 25-year low on prices for natural gas. Next one is the 1 to 5 day. The 1 to 5 day right now currently looks kind of for me, it's bullish. For me, it looks bullish. You know, you want to see more blue, especially during the winter. You want to see purple. During the winter, you want to see purple. During the summer, you want to see red, hot, very hot, because that's going to create demand for natural gas, electricity demand. Companies are going to have to make more power to keep up with the demand, and they're going to burn more natural gas. 6 to 10 day, not looking too good. It's kind of in the middle. I'm just looking at the colors because I'm a colorful person. So I like to look at the colors. Right now, for me, this is looking kind of neutral, it's not cold, it's not too hot, it's just like black. 10 to 15 days, that actually looks a little bit, for me, in my case, I think a little bit more bullish when it comes to we're getting to summer contracts. So I want this area right over here, I want it to get very hot. I want to see it in the red, in the orange colors, because that's going to tell me that, okay, natural gas prices might most likely go up based on the 10 to 15 day ensemble. And then you got other things like a 16-day cluster. You have the North America model with it. Actually, it's a running GIF, GIF, where you can see what's happening. The hours are basically the days where this thing is running. There's other models that you can look at, but if you're just beginning and you got limited resources, I do recommend this website. It's fantastic. Those help me out a lot. I can go in here, in and out whenever I want, and it actually shows me not just United States. It shows me all the parts of the world. Okay, let's say Northern Hemisphere. You know, during the winter, it's very popular to see polar vortex news and what's going to happen. Are we going to have splits? And what's a polar vortex? Google it. Don't want to be rude or anything. It's just it takes a professional to kind of explain polar vortex. I'm still learning about polar vortexes and what causes polar vortexes. So if you are a weather professional, you know, I would love to have you in my chat. So make sure you go down below. That being said, you got Northern Hemisphere, Southern Hemisphere. You got El Nino model, which is that weather system called El Nino, causes also deviations on weather patterns, right? So it has everything that I need to know. It's quick and simple, and I think you guys would enjoy it. So this is where I get my information for what the weather is going to look like based on the current supply. If supply is low and the weather is going to turn bullish, you know, that's where you want to go long. But if supply is high and the weather is going to turn bearish, that's when you want to go DGAZ, or you want to short natural gas, or, you know, buy puts on UNG, you know, some of those ideas. So that being said, guys, hopefully you guys liked the video. Hopefully it was more informative than before, and it helped you better understand what the market conditions are and what I think is going to happen. Anything is possible. It can go up or down. It's kind of like a gamble, but with some analysis behind it, some fundamentals behind it, and that's why I like to trade, because it's better than going to the casino and betting just black or red, because you might just get a 00 or 0, and it's like, okay, that's, you know, you don't have 50-50 chance. With here, either it goes up or goes down or stays sideways. So I guess the staying sideways might be the 00, but you're not losing or winning, so it's kind of good. With 00s, you actually lose. However, you guys get it, right? So make sure you do subscribe to the channel, and thanks for watching. See ya.